We're now joined by Jörg Zeuner, Chief Economist of the German government-owned development bank KfW Bankengruppe. Welcome, first of all. How do you view these developments here in Berlin? Is it a positive thing or a negative thing?
It's mainly a catch-up process. The level of prices in Berlin are relatively low, even compared to Germany and certainly internationally, and therefore prices have been catching up for a number of years.
And is it too late for people who still want to buy? I mean, every magazine you pick up says buy, buy, buy. Have they missed the boat?
That depends on your personal perspective, on your objectives, whether it's worth buying into the Berlin market or, in fact, any other market at this point.
The other thing is everyone keeps saying this is not a bubble. Can you be so sure that this is not a bubble, like we saw in Spain?
The bubbles we've seen bursted when prices on a national level reached or doubled or tripled. Now, this is nothing that we see in any of the German cities, including Berlin. Over the last 6 or 7 years, prices in Berlin increased by around 40%.
But they could keep going up. I mean, there's a lot of cheap money around at the moment.
They could be going up if demand stays up, and it is true that at the moment it is relatively easy to get mortgage loans, or relatively inexpensive to get a mortgage loan. But we also see that the amount of mortgages outstanding in the German banking system is not increasing at a higher pace than in the past.
Well, if we take a look at mortgages and pull in our graphic, you'll see the downward trend over the past decade for the interest you have to pay on 10-year mortgages. Is it going to stay down at that level for long, or how long? Can you tell us how long it's going to stay down at that level?
The interest rates are low because the European economy is growing very slowly, or in parts of the continent even in a recession. And as long as this is the case, interest rates will be low. As soon as we have more economic growth across Europe, I expect interest rates to also adjust to this then new and better environment.
So you're talking the next couple of years?
It looks like in the course of this year, economic growth will pick up across Europe, and then we'll see where it takes us next year and the year after.
What about the employment situation in Berlin? Because that has played a major factor.
Employment plays a large role in the growth of cities in general. Now, for Germany as well as for Berlin, what we see is that employment is growing, the employment rate is coming down, and that's a development that we also find reflected in the housing market.
And at the same time, we mentioned in that report people being pushed out of their apartments, pushed out of the city. State intervention, what do you think about that?
There are several ways of dealing with housing price increases. As I said, at the moment, this is a catch-up process. Prices are growing slowly. They're growing somewhat a little bit faster than income, but still in line with what I would call a catch-up process.
But should the government be putting a cap on rent, for example?
There are several, as I said, there are several interventions that the government can think about. You're mentioning this one, but it's also rising prices are attractive for new home builders, and that would be another important area to look at. And we, in fact, anticipate that more buildings will be built, more apartments will come soon. We'll see that in the construction numbers.
Okay, thank you very much for your time, Mr. Zeuner.